Let's dive into Warren Buffett's latest moves that have everyone talking. You've probably heard that Warren Buffett, the Oracle of Omaha, just sold all his S&P 500 ETFs. But before you panic and sell everything, let me tell you why this might actually be a good thing for your portfolio. Warren Buffett, the legendary investor and CEO of Berkshire Hathaway, has been making waves in the investment world once again. His recent moves have caught the attention of investors and analysts alike, sparking debates about what these decisions might mean for the broader market. Let's break down what's happening and what it could mean for you. First, let's talk about the big news. Buffett's Berkshire Hathaway has completely sold off its positions in two major S&P 500 ETFs, the SPDR S&P 500 ETF Trust, SPY, and the Vanguard S&P 500 ETF, VAO. Now, before you start thinking this is a sign of impending doom for the stock market, let's put things into perspective. The total value of these sales was around $45 million, $22.6 million for SPY and $22.68 million for VOO. In the grand scheme of Berkshire's massive portfolio, which is worth hundreds of billions of dollars, this is basically pocket change. We're talking about less than 1% of their total holdings. So why did Buffett make this move? Well, it's important to understand that this isn't a panic sell or a sign that Buffett thinks the market is about to crash. Instead, it's more likely a reflection of his investment philosophy and strategy. Buffett has always been a fan of picking individual stocks rather than investing in broad market indexes. He believes in finding great companies at fair prices and holding them for the long term. This move aligns perfectly with Buffett's value investing approach. He's not trying to time the market or make quick profits. Instead, he's looking for businesses with strong fundamentals, durable competitive advantages, and excellent management teams. By selling these ETFs, Buffett is likely freeing up capital to invest in specific companies that he believes offer better long-term value. Now, you might be wondering, if Buffett's selling these ETFs, should I do the same? The answer isn't a simple yes or no. Remember, Buffett's investment strategy is unique to his situation and goals. What works for a multi-billion-dollar conglomerate might not be the best approach for individual investors like you and me. For most people, broad market ETFs like SPY and VOO can be excellent investment vehicles. They offer diversification, low costs, and exposure to some of the biggest and most successful companies in the world. Just because Buffett is selling doesn't mean these ETFs have suddenly become bad investments. But let's talk about what Buffett is buying, because that's often just as interesting as what he's selling. One of his recent moves that's caught a lot of attention is a new investment in Constellation Brands, ticker STZ. If you're not familiar with Constellation, they're a major player in the beverage industry, owning popular brands like Corona Modelo and Svedka vodka. This investment is particularly interesting because the beverage industry, especially alcohol, has faced some challenges recently. Consumer preferences are shifting, and there's increased competition from craft brewers and alternative beverages. So why would Buffett invest in this company now? Well, it goes back to his core investment philosophy. Buffett isn't looking at short-term market trends or trying to capitalize on temporary shifts in consumer behavior. He's looking at the long-term potential of the business. Constellation Brands has a portfolio of strong, well-known brands, a history of solid financial performance, and a management team with a track record of success.
Check one, check.
This investment shows that Buffett believes in the long-term potential of Constellation Brands, despite any short-term challenges they might face. It's a perfect example of his buy-and-hold strategy, finding great companies and sticking with them through market ups and downs. So what can we learn from Buffett's recent moves? First and foremost, don't panic over short-term market fluctuations or individual investment decisions, even if they're made by someone as respected as Warren Buffett. The stock market is complex, and what works for one investor might not work for another. Instead, focus on developing a long-term investment strategy that aligns with your goals and risk tolerance. This might include a mix of broad market ETFs for diversification and individual stocks if you're comfortable doing the research and taking on more risk. Remember Buffett's advice to invest in what you understand. If you don't have the time or expertise to analyze individual companies like Buffett does, there's nothing wrong with sticking to index funds or ETFs. They can provide broad market exposure and have historically delivered solid returns over the long term. Another key takeaway is the importance of diversification. While Buffett's Berkshire Hathaway is heavily concentrated in a relatively small number of companies, this approach isn't suitable for most individual investors. Spreading your investments across different asset classes and sectors can help manage risk and smooth out returns over time. It's also worth noting that Buffett's investment horizon is incredibly long. He's not trying to make quick profits or time the market. Instead, he's looking for businesses that he believes will be successful for decades to come. This patient, long-term approach is something all investors can learn from. Now, let's address a common question that might be on your mind. If Buffett is selling ETFs and buying individual stocks, should I do the same? The answer, as with most things in investing, is that it depends on your individual circumstances. If you have the time, knowledge, and interest to research and analyze individual companies, you might consider adding some individual stocks to your portfolio. However, this approach requires a significant time commitment and a willingness to accept higher risk. You need to be prepared to monitor your investments closely and make informed decisions based on company performance and market conditions. On the other hand, if you prefer a more hands-off approach or don't have the time to dedicate to stock research, there's absolutely nothing wrong with sticking to ETFs or index funds. These investments offer broad market exposure, automatic diversification, and typically have lower fees than actively managed funds. Remember, even Buffett himself has recommended that most individual investors are better off investing in low-cost index funds rather than trying to pick individual stocks. In fact, he's famously bet that a simple S&P 500 index fund would outperform a basket of hedge funds over a 10-year period, a bet he won handily. Another important point to consider is the size of your investment portfolio. Buffett's Berkshire Hathaway has billions of dollars to invest, which allows them to take large positions in individual companies and even buy entire businesses outright. Most individual investors don't have this luxury, which is why diversification through ETFs or mutual funds can be so important. Let's also talk about the importance of staying informed but not overreacting to market news. Buffett's investment moves are widely reported and analyzed, but it's crucial to remember that he's making decisions based on Berkshire Hathaway's specific goals and circumstances. While it can be interesting and educational to follow what successful investors are doing, you shouldn't blindly copy their moves. Instead, use this information as part of your broader investment education. Try to understand the reasoning behind these investment decisions. What does Buffett see in Constellation Brands that makes it an attractive investment? Why might he prefer individual stock picking to holding broad market ETFs? Understanding these thought processes can help you become a more informed and confident investor, even if you ultimately make different decisions. It's also worth noting that Buffett's recent moves don't necessarily indicate a lack of faith in the overall stock market. Remember, Berkshire Hathaway still holds massive positions in companies like Apple, Bank of America, and Coca-Cola. Buffett has consistently expressed his belief in the long-term potential of the American economy and stock market. So what's the bottom line? Warren Buffett's recent investment moves, selling S&P 500 ETFs and buying Constellation Brands, offer valuable insights for all investors. They remind us of the importance of having a clear investment strategy, focusing on the long term and not being swayed by short-term market fluctuations. Whether you choose to invest in individual stocks, stick with ETFs, or use a combination of both, the key is to have a well-thought-out plan that aligns with your financial goals and risk tolerance. Remember, successful investing is a marathon, not a sprint. It requires patience, discipline, and a willingness to learn and adapt over time. As we wrap up, let's recap the key takeaways from Buffett's recent moves. Don't panic over short-term market fluctuations or individual investment decisions. Focus on developing a long-term investment strategy that aligns with your goals and risk tolerance. Invest in what you understand, whether that's individual stocks or broad market ETFs. Diversify your portfolio to manage risk and smooth out returns over time. Stay informed about market news and successful investors' strategies, but don't blindly copy their moves. Remember that what works for a multi-billion-dollar conglomerate might not be the best approach for individual investors. Consider your own time commitment, knowledge and interest in managing investments when deciding between individual stocks and ETFs. Keep in mind that even Buffett recommends low-cost index funds for most individual investors. Use investment news and analysis as part of your broader financial education. Above all, maintain a long-term perspective and stay true to your investment strategy. Investing can be complex and sometimes intimidating, but by learning from successful investors like Warren Buffett and applying those lessons to your own situation, you can build a strong, resilient portfolio that helps you achieve your financial goals. Remember, the key to successful investing isn't about making perfect decisions all the time. It's about having a solid strategy, staying disciplined, and being willing to learn and adapt over time. Whether you're just starting out or you're a seasoned investor, there's always something new to learn in the world of finance and investing. So keep learning, stay patient, and remember that building wealth is a journey, not a destination. With the right approach and mindset, you can navigate the ups and downs of the market and work towards a secure financial future. Thanks for watching this video on Warren Buffett's recent investment moves. If you found this information helpful, be sure to check out our next video where we dive deeper into value investing strategies you can use in your own portfolio.